It's April Fool's Day. It's another market report with Alex Peters. Alex, how are you?
I'm doing great, James. Thanks for having me on. How are you doing?
I am really good because anyone who has watched previous episodes has seen me say, I've got a client who's writing offers 200K over ask. I've got a client who's writing over and over again. I've been talking about my good friends who have literally been writing. We were, I think, over 16 offers. We lost out on everything. This market is insane. And so I got so fed up of dealing with properties that were on the MLS. We literally went out and we were calling neighborhoods, we were door knocking, we were sending letters out. I was trying to find something for them. I did it.
Yes. Nice one. Nice one.
Good job. Literally, we called someone in the neighborhood said, I think there's someone who is selling. I went and door knocked them. I found them a property off market. We are going to be closing next week. Both sides are unbelievably happy. And it just shows you if you get the right real estate agent and they go out and they hunt for one, then it can still happen. You can get a home. But whoa, has it been a journey? But yes.
Nice one. That's good. Excellent.
Loans. Now, one of the things that I'm noticing is interest rates obviously crept up last time we spoke, but have they gone up any more since the last time we spoke? What's the update on the loans?
A little bit. They've leveled off mostly. But they have gone up a little bit. Let me pull it up here. Okay, so VA, FHA, it's still the same. When we last spoke, it was 2.75 if you've got decent credit on a purchase, buying a house. It's still right around there. Might be a little closer to 2.875 if your credit's not quite where you need it to be. Conventional has definitely ticked up. I think last time we spoke, I could still probably get 2.8. Now, the best I could probably get is around 3.25 on a single family home with good equity. Maybe 3.125 on a good day, but it's definitely gone up since we last spoke. Right now, I'm looking a lot between 3.2 and 3.7, just depending on if it's a condo, single family, if it's a good credit, bad credit, et cetera, et cetera. Jumbos are pretty steady, right around 3.25, 3.75 with good equity position. And then conventional high balance loans, similar to last time, about 3.25 as well. So overall, they definitely have gone up. If you rewind back to February, we were talking about 2.75 on conventional, no problem. So about a half of a point since then.
And one of the things to remember with this is we don't know where they're going to go, but historically, they've been a lot higher than where we are. More than likely, we feel that interest rates in the long term are going to rise. How quickly that is, we don't know. Right. But one of the reasons why this market is insane is because the interest rate is low. And we always talk about this, but you've got to look at your situation, work out the math. But the reason why people are not scared of buying now is because they're getting a low interest rate. And if they're going to be in that property long term, then they're going to be staying in that property. Sorry, yeah. I just got off there, don't worry.
Sorry about that.
More than likely, if you stay in that property long term, you're going to save money than if you buy a house at potentially a lower price. So I just, highly advise people, don't be completely put off because house prices are high. But then I keep saying the same thing as well. Don't overpay for a house, because I still feel, I say this every single month, I still feel with the height of the market and the house prices keep rising. But at some point, house prices, whether it's a few months, year, 2 years, are going to drop. So the key thing is to chat to someone like Alex and myself, work out all the numbers, work out your long-term situation, and then we can talk things through. What about jumbo loans? Because I did hear from someone else the other day that 10% loans, having a jumbo with a 10% are coming back in. Have you got any more info on that?
Yeah, so there's actually a couple things that I want to mention just as we're moving into a different phase of COVID, things starting to open up a bit more, vaccine rollout, all positive stuff, right? We've seen guidelines change on almost all of our products for the better, where at the beginning of COVID or prior to, they were, a lot more loose. And then COVID came and they brought the hammer down on a lot of programs to, avoid risk, taking on too much risk. We started seeing those relax again. For example, one thing we had to do on the lending side ever since COVID started was do a verification of employment within 48 hours of closing. So we do it up front, we get the paperwork, but then 2 days before we close, we were calling the employer to say, do they still work here because of all the mass furloughs and layoffs and stuff like that. As of today, that's gone. We don't need to do that anymore.
You know what?
So
we were getting that all the time. It seemed to be 3 or 4 times, especially when there was self-employed and it got complicated. Yeah, every single deal was a headache with the loan. So that's really good news that
it is. We had a couple of closings get delayed because HR wasn't getting back to us. So it wasn't even a matter of will they qualify or not. We kind of get a hold of them and they would get back to us 3 days later. Now that 48-hour window is expired or whatever. So that's a nice thing. As you mentioned with jumbos, we've got the 10% down program back now. So that's previously, I think we talked about, we had you can put 10% down, get a 10% second, and then it's like having 20% down. We have one that's just straight up 10% down. The rate is going to be higher than if you're putting 15 or 20% down, obviously. But I believe that program also has no PMI, private mortgage insurance as well. It just depends. So you have to be well qualified. You got to have good credit, good reserves. That's another one. So if you're putting money down and you have closing costs, reserves are money that's left over so that they can see you can make a payment for the next 6, 12, 24 months. So if you have questions about that, do talk to me. The other thing I wanted to address as well, if you are worried that interest rates are going to continue to rise, we have a solution for that. Let's say you're of the opinion that rates are going to go to 4% in the next 2 months. I personally don't believe that, but let's say that you do and you want to hedge your bets. You can get pre-approved with us and we can do something called a lock and shop program. So we can lock you in at the time of pre-approval for 60, 90, 120, all the way up to a year in advance. The longer you lock that in, the more points that you would pay at closing. There's no upfront fee, there's no fee to do it at all. So I have multiple clients on it right now that lock themselves in for 90 days at a lower rate than where rates are right now. So they're happy. As long as they find something, as long as they find something, we close by that 90th day, they get the lower rate. And if rates improve before then, they get the better rate as well. They just don't have to worry about it going up. So talk to me if you want to.
Probably a no then, because is there any actual, you don't pay a fee for that, but is that right? You don't have to give you money to get that rate.
Yeah, there's no upfront fee. However,
there's no risk then really, because if interest rates rise, you'll have to pay a little bit extra to get the interest rate, the lower interest rate, but there really is no risk. So if you're thinking of buying in the next weeks, months, year, you've got an opportunity for someone to lock in that rate.
Yep, we can lock it in. So the way a loan lock works is typically you call me and say, hey Alex, we got Mr. John Doe in the escrow. I lock it in on that day based off of how long the close period is, and the average close period is 30 days or less right now. And so that lock period is 30 days. If we need to lock it for 45 days, it's slightly more expensive than 30 days, meaning you may have to pay 1/8 of a point, which on 400,000 it's not gonna be much. It's about $1,000 or so, $800 or so. So the longer we lock it in, the more points that there would be, but you don't pay it up front. You pay it at closing. It gets added to your closing costs. So if you want to hedge your bets, lock it in at 3.25 today and rates go to 4%, you wouldn't mind paying half of a point to know that you got that peace of mind and that lower cost essentially. So
just so people understand, if they're getting an example, $1 million loan, how much is half a point going to cost them?
Half a point on $1 million would be $5,000.
Yeah, I know that, but I just wanted to make sure that everyone else understands it. Because when I first got my real estate license years ago, I didn't have a clue what any of that meant.
That's okay. I talk to people all the time, they don't understand what a point is. And I sometimes use the verbiage as if everybody knows what it is. So good example to clarify that. But we do a cost analysis for you. Does paying these points make sense for you? Meaning compared to the par rate, if I pay extra, how long does it take me to recoup that additional cost? We can do all that with you.
Brilliant. Any other products or anything else you wanted to talk about today, Alex?
No, I think the biggest, most value add right now is that lock and shop for the client who may be concerned that, hey, I'm shopping, I don't know if rate's going to go higher. Hedge your bets. Just give us a call. We can do that. The 10% down jumbo's back. We're seeing a lot more lax on the guidelines where things are getting easier again. And I have a feeling the next time we talk, there will be more of that. There'll be more lenience in the guidelines, possibly even some new programs coming out. So the only other thing we have right now is if you are a first responder, you have until the end of May or the beginning of June to do a loan with us, and we'll waive all our fees, all our lender fees for you.
Oh, that's good.
Yeah.
Okay, great. Well, thank you for coming on. As I mentioned before, the real estate market is still insane. There's still, 20 to 30 offers often on homes. Sometimes you can't even get in because they're fully booked with viewings. House prices are still unbelievably high. What I'm doing for my clients is I'm trying to find them something off market. We literally have people calling and emailing and door knocking and sending out letters. So if anyone is looking to buy, the best thing to do straight away is make sure that you're pre-approved with Alex, and then let me know exactly what you're after. And then once we've got that, I can then hunt. If something comes up on the market and we can get it for you at a great price, that's fantastic. But everyone's situation is different. And if you don't want to pay way over what it's going to appraise for, then let me know what you're after, and I will do my best, and I will hunt and hunt and hunt for something for you, like I did with my friends. We did it.
Yes.
Right. Thanks, Alex.
Cheers. Thanks for having me on, James. Talk to you soon.